Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, December the 31st. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. So, having that out of the way, some economic data that we have out. Initial unemployment claims came out. It comes out on a weekly basis. It is a precursor to what we should see on the non-farm payrolls on January the 8th, which is next Friday. But the initial unemployment claims came in higher at 287,000. They were expected around 274,000, so higher than expected count for that, which means more people are looking for jobs. Big thing came out was Chicago PMI, which is supplied by the Institute for Supply Management. This is the Purchasing Managers Index, and that came in at 42.9. Below 50 is showing retraction in the economy, and that was a big fail. It was supposed to come out at a 50.4, which is basically flatlined. But this is a retraction, anything below 50. So that could be signaling the recession that I'm talking about. Going into second quarter, I was saying we were going to probably be looking at going into a recession or something along that line. So anyway, this is all starting to come together like I've been talking about. Does that mean that the stock market's going to go down? No, not necessarily, because it could be a signal for more easing now that the Fed has just raised rates at a time I've said was wrong. They are at least going to probably be holding off any future rate hikes and won't be achieving that 1.5% by the end of 2016 like they projected. So keep that in mind as well going forward. This nat gas trade, I took off on basically, I think it was on Tuesday. I took it off because it was right into a winter. I took it off on the 29th. So I meant to talk about that on the 30th, which was yesterday, but my filming didn't work out very well, and I had to get prepared for the webinar, which went over really well. But in this UNG, I had on the February 8 calls and sold the 7 puts. And I originally collected 16 cents for that. I got out of it for a $1.03 credit. Now, I looked at it just before going on here. Yesterday, I was looking like a genius because it had come off so much. Today, it has popped back. It looks like it just covered this little mini gap right here. So the shorts could be looking to still cover. That's what I saw as in this pop, so I decided to cover it. But if you still have that trade on, that would, I took it off. It could still pop higher, but it's right at that area I thought would act as resistance, so I decided to take that one off. All right, so moving on to trades that I've done today. That was in UNG. The overall markets are down, so I probably should talk about that. The overall markets are down, probably coming back after that data, but after the data came out, the market sold off. We're rallying back to the point of control for the E-mini S&Ps. As you can tell, we came down here, we were testing the resistance again after breaking through, broke down below this value area for a second, and then have rallied back to the point of control. So that is something important to note. Same with the NASDAQ, rallying up, trying to make this look like it's going to want to go higher. I don't know. I'm not huge into head and shoulder charting, but that could start to look like a shoulder coming in there. It may be broken. Some people would think that it needed to come down, but there's the neckline right there. I don't know. So it has tested this value area high and rallied off of it. So very important points that the S&Ps and the NASDAQ have tested, and the bulls are holding their own weight right now. All right, on to Yelp. This is probably going to be a long one for New Year's. So anyway, with Yelp, I was just looking at this for a bullish type of trade. I was even looking at an iron condor. I just couldn't get enough money for the call side of this strategy. So I did the February 23-26 put spread, and I collected $1 for it. So that trade, like I said, I guess I'm going to think it's bullish. Maybe if it rallies up into here, I'll be able to put those calls on for a little bit better. But I couldn't get $1 for the 3 strike wides on the call side. I think I could only get like 7 cents is where I was looking at. So 70 cents, I should say. So it just wasn't very attractive on the call side for an iron condor. All right, moving on to Best Buy. Best Buy, I also was kind of looking at doing a condor in this, but needed to add some long deltas. And Best Buy, I just decided to do the February 32-33 call spread, and I did it for 32 cents. So I got a third the width of my strikes there as well. The last trade that I did was in CRM. Now, in the webinar yesterday, I was talking about Pfizer and a couple other trades. Well, I came across this one this morning, Salesforce.com, ticker symbol CRM. That one fit the bill for this call spread. I have really low implied volatility, as you can see here. It was in the teens, or maybe even, I think it was like 9 or 10 on the implied volatility rank, which meets the criteria of the strategy. And we just had tighter markets than I could find in Pfizer. I was giving up too much of an edge, it felt like, in Pfizer for this trade. So I did the February 72.5 calls, and then sold the 85 calls to create that long call spread. I did it for $6.66. That put me right there at, if you add in the 72.5 calls to the $6.66, that put me buying this at around 79.13 or 79.16. So I got it below the market when I did that strategy, just like we talked about. So I'm synthetically long it from 79.16, and really want it to rally up here and test the highs. And if I get that, then that's creating that synthetic collar. I don't own the stock, but my risk parameters are all the same. So go to ProTraderStrategies.com if you missed that one. It's a good one. There's a lot of opportunity in the market to put this in. So this type of strategy, and especially on a day like today where we've come off a lot and are wanting to rally back. So it looks like the bulls are still in control. So that's about all I got for you guys today. Check out that website, ProTraderStrategies.com. You can get that video on the long call spreads. All right. If you can't take that, take it easy.